Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp, MGI and the TSX Venture Exchange. A 2015 drill program on the LH property intersected several high-grade gold intersections, including 11 meters of 20.66 grams per ton gold. Additional drill targets on the LH property have been identified by a 2018 drone airborne magnetic survey to further evaluate a pyrrhotite-enriched gold-bearing system. Please visit our website at magnumgoldcorp.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Rick Ackerman, editor of the newsletter Rick's Picks, his website rickackerman.com. Welcome back to the show, Rick.
Always a pleasure to join you, Jim. Thanks for inviting me.
Gold, what kind of a situation is it finding itself in right now?
It's finding itself in a very precarious situation. When I look at the daily chart, it looks pretty bullish, although you couldn't tell that if you actually own gold. That's not the sensation you would be getting here. But I say that gold is fundamentally bullish on the daily chart because the last good rally took out a pretty big peak that had been made on the way down over last spring and summer. So I see this move as corrective, but if it goes much lower than 1281 basis the April, and that's only $3 below here, it could start falling apart, meaning, well, not falling apart, but another $40 of downside to around 1241 on the April COMEX would not exactly be good news for all the gold bugs.
What's driven the price down?
I think it certainly hasn't caught the fancy of institutional buyers. Gold seems to be supported mainly by mysterious forces, and it's in a kind of a holding pattern that would look to be, well, I think it has embarked on a bull market, but again, if you own it, that's not the sensation of pleasure you'd be getting here. So I don't know. It's sort of a standoff. The sellers don't really seem to dominate much. There's not a good consensus for dumping gold here, but neither is there a strong desire to buy it.
Is it a case of just hold on to what you have and don't think about buying any more unless you see the prices drop?
I think so, although I'm surprised. Even in my own chat room, I've got guys who have suffered through gold since 2011, especially in mining stocks that they may have owned. And, you know, that's been quite a bottom fishing disaster because the more bottoms you fish, if you're averaging down, you're slowly going broke. But I think that on the strength of the bullion charts, the futures charts, this is not a bad time to be gathering some of the better junior miners, the ones that show more promise, meaning the ones that are going to survive. So they've been hit so hard that I'm not going to say they can't go lower, but they're certainly at distressed prices relative to where they've sold in the past.
Now, PDAC, the Prospector Developers Convention in Toronto, is underway, and there's a saying, there's a PDAC curse that junior gold miners go up in shares and in stocks going into the convention, and then they fall afterwards. And somebody said, well, it's just a coincidence. They hold their convention at the start of spring, and traditionally that's what happens to mining stocks anyway. Do you have any opinion on that?
Yeah, I'd stay away from that bet next year. You know, if we're reading about that the stocks tend to go up ahead of these mining meetings, and it's true that it's such a small world, the stocks are so thin that whatever exuberance gets generated in conferences like the one you mentioned, it can materially impact these stocks. But again, just for the fact of the impact having been noticed, I would steer clear of that bet next year.
On the stock market mix today, what's your thoughts on what's going on?
I hate this market to death. ultimately, I just let my charts do the talking, and the charts are never wrong. So I have trouble believing that the rally that we've had since December 26th, which has recouped about 2/3 of what was lost, even more than that actually, in the slide that we had from October on. I have trouble believing we're just in a new bull market or a renewed bull market. So I see the rally since late December as a bear rally. And as far as my gut feeling, I would still feel we're in a bear rally even if the Dow hits new all-time highs. I'd be very wary of a bull trap up there. And my thinking goes to the quote-unquote fundamentals. I hate to think about fundamentals because, of course, the market has no real ties to the real world. It just kind of does its thing. But in this case, we see the automobile business globally starting to implode, and the energy sector hasn't looked too hot, and retail starting to fade. We've got China reporting the slowest growth in 3 decades, and Germany growing at under 1%, the supposed engine of Europe's economy. And even though you get the impression reading the front page of the Wall Street Journal that everything is rah-rah great, that's not the case. So they seem to focus so much on a jobs market that I don't know what to make of it, really. But I don't think the economy is nearly as strong as it's made out to be in some of these rah-rah publications. And for that matter, just a turn of the screw on interest rates or some other unexpected problem, and we could be in recession.
We'll have more with Rick Ackerman right after this.
MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
I'm Kelly Jennings, CEO of PowerBand Solutions. PowerBand is a cloud-based provider of auction, inventory, and finance solutions that make buying, selling, and financing vehicles more efficient. PowerBand Solutions trades on the TSX Venture Exchange symbol PBX and on the OTCQB symbol PWWPF and on Frankfurt symbol 1ZB. For more information, please visit us at powerbandsolutions.com.
Welcome back. We're speaking with Rick Ackerman. Rick, how are the trade talks between the U.S. and China going, and are they much of an influence on the markets right now?
Well, it's a funny thing. A lot of the so-called experts were quoted overnight as saying that yesterday's the Dow was off 400 points at one time. They attributed that to anxiety over the trade talks with China. But I think the weather in Peoria was probably more significant than these trade talks. The expectations have been slowly ratcheted down, and it looks like we'll get some mutual tariff relief, which is certainly going to be a good thing. But I would guess that key issues, including intellectual property problems, will remain unresolved. So I've been saying all along that China, whatever deal we make on tariffs, it's a question of buy the rumor, sell the news. So when the deal is cemented, I don't see the market getting much boost from it, even when the results are in.
And also, the tariffs, apparently, when it comes to enforcing steel and aluminum tariffs against Canada, it's about 97%. China, so many of their imports are exempted from the tariff. Somebody said they're really not having any impact on their trade.
I guess that's true to an extent. The tariffs are certainly having an impact on the economy. China's economy was already in a weakened state. I guess a sort of retrenchment from a time of great exuberance. But there's no question that both sides are getting hurt.
Are American soybean farmers in dire straits right now?
Well, not just soybeans. It doesn't matter what you farm these days. It's you're always in dire straits, and as those who go into farming, take over family businesses, are frequently quoted as saying, "You got to be crazy to be a farmer." I got a first-hand look at a farm in New Hampshire. It's called White Gate Farm, and the fellow who owns the farm, Hank Letarte, is a friend of mine, and it's amazing how the farm has to run absolutely with absolutely perfect efficiency to make any money in it. So Hank Letarte winds up he farms. He's a pig farmer, and he's the guy that shows up at the farmers market every Saturday with famous sausage. He's kind of a local legend, but he also grows tomatoes and anything else he can make money on. He goes out and scrounges coffee grounds from Starbucks, because when he puts it in his compost, it keeps the bears away. He uses piles of mulch to generate heat for his vine-ripened tomatoes. And when you see how perfectly he does everything, he told me that a great year for him would be something like, if he can clear 35K, that would be a fabulous year. So bottom line for him, he says that farming is a great way to live, but a poor way to make a living.
Yeah, and then you look at the prices at the grocery store, what a big disconnect between what farmers get for their cattle and what you pay for a steak.
It's amazing. It really is. And sometimes I go to Publix here in South Florida, and things are expensive. Just a little package of this or that in the produce section, you pay $3 for some chives. I used to go out in my backyard and gather in a couple minutes what might sell in a store for $25. It's hard to imagine how much chive you'd need to have that value.
Yes, and cereal, that's another one where you look at what farmers get for their wheat or their oats, and then what they charge you for a box of it.
Yeah, there is a disconnect, as you say.
What happens when the farmers just don't get enough and they all start abandoning their fields because it's not worth the time and money?
Well, agribusiness or the developers take it over, and it's amazing how there's demand for developable land. Let's put some condos here in what used to be a Nebraska cornfield. I don't know where the housing demand comes from, unless it's all people fleeing California. But there's so many places where you see the farmable land getting swallowed up by developers who are, I guess, so optimistic that they would build condos or a housing development in the middle of nowhere in Nebraska and somehow find people to buy those homes for $300,000 or $400,000.
We'll have more with Rick Ackerman right after this.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain Royalty Corp. is a Canadian-based mineral exploration project generator. The company currently holds multiple property interests in Ontario with joint venture partners and is seeking further joint venture partners for other drill-ready properties in our portfolio. For more information, please visit our website at rmroyalty.com or call me at 604-922-2030.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Rick Ackerman. Rick, Tesla cars, they always promise to be a market changer, and they just announced that they will no longer have dealerships. They'll just sell their cars online. What kind of an impact is that going to have on the auto industry?
I think the auto industry is having its troubles to begin with, and I don't know that Tesla's sinkage or possible failure is going to do much good for General Motors and Ford. But I don't think it's a good move by Tesla, and even Musk himself could only sort of put the best face on it. He said that if they eliminate the cost of a dealership network, it would allow them to sell the Model 3 for $35,000 as promised, and maybe even leave a small amount of profit for Tesla. But what that is asking is that people buy their cars online, no test drive. You're just shelling out $35,000. You don't really have the help of a salesperson. And even though, yes, we pay commissions to salespeople, a lot of times they prove to be worth it. So I think it's definitely going to hurt the market. I'm surprised that Tesla didn't get knocked harder on the initial news, which seems to have caught the dealer network by surprise. Some of the salespeople learned that they were going to be furloughed just from Musk's tweet that they were doing away with the dealerships. So Tesla has so many problems now. That's not the only one. One is that if you get your Tesla fender dented, it can take 6 months for the new part to come in. They have the part replacement service is in complete disarray, and even Musk himself mentioned, "Oh yeah, we got to do something about that," because in some instances we're shipping parts to China. They're shipping parts to China that gets shipped back to us, or it crosses the ocean a couple times before it winds up in the shop where you need it. So supposedly unsold Teslas are piling up in storage in various places. This is one of the quiet stories that's been getting told. People who have wanted refunds, backed out of Tesla purchases, are finding that it takes forever to get the refunds. So it just seems like there are a peck of troubles. And even though you look at the long-term chart of Tesla, it seems to be ever upward, but sometimes in these huge consolidations, which since last spring we've had Tesla swing between around 390 and 250, giant swings, but it still looks in the very long-term charts like a consolidation for a move, in Tesla's case, all the way up to 464 from a current 279. I have trouble believing that, but even now, with all the bad news coming out on Tesla, the stock is holding its lows. It's well above its lows from 2018. So it doesn't make sense to me unless the institutional sponsors of the stock are so nutty that they're really, Tesla's the future and we don't care what happens to the stock. It's such a beautifully disruptive model that we'll buy the stock no matter what.
Well, also, you're going to have all these dealers and salespeople. What are they going to say about Teslas when they go back out and work for other car dealerships?
Yeah, it's not going to be pretty for sure. I mean, they're all to make an aggrieved class out of all your salespeople is not a good thing. But we're going to be hearing some Tesla stories, I'm sure.
And where do consumers go? You buy a brand new Tesla and something goes wrong. Where do you take it? Are other people even qualified to work on it?
I guess they use the existing network of independent repair shops, and I'm not quite sure. I haven't owned a Tesla or experienced the service side of it, so I'm not quite sure how they handle the service. I remember even, when Volvo came in with GM, this would have been back, I guess, in the 1970s, they somehow thought that the GM network would offer good service, but you're never going to beat the service that the maker itself provides, and so that's going to be another problem for Tesla. Without a dealer network, they're going to have, I think the service problem that exists already is going to get worse.
Rick, thank you so much for chatting with us.
My great pleasure, Jim, and thanks for inviting me on.
My guest has been Rick Ackerman, editor of the newsletter Rick's Picks, his website, rickackerman.com. You're listening to HowStreet.com radio. Find us on Twitter at HowStreet, our YouTube channel, Talk Digital Network. If you have any questions for Rick or any of our other guests, you can send them to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at talkdigitalnetwork.com. HowStreet.com Radio is a production of How Street Media Incorporated.